We want to talk about a more unconventional investment strategy this morning called quantamental investing. The method is calling for a different approach to evaluating and analyzing publicly traded companies. And joining us to talk more about it is Chiron Investment Management CEO Enrico Gaglioti and co-founder and chief investment officer Ryan Caldwell. Good to see you guys. Thanks so much for joining us.
Thanks for having us.
Welcome. So you launched the firm Chiron in July of 2015.
That's correct.
With seed money of $25 million, and now you're up to $500 million.
That's correct.
Terrific.
That's right. Yeah.
Tell us about the firm.
Yeah, great. So, as you know, Maria, I've spent 20-plus years in financial services, and through that seat is really where I got to know Ryan. And so we basically came together in early 2015 and thought about starting an investment management company that was focused on Ryan's previous background in investing and quantamental approach towards investing. And so we launched the firm in July of 2015, and we launched our first fund in December of 2015.
What are you seeing in terms of investors right now, Ryan? What sentiment do you get? We're talking about everything being keyed off of policy coming out of Washington. Is that what you're seeing?
Yeah, so I think it's a really good point in that if you look at what's happened with consumer optimism, CEO optimism, it's exploded really in the last 5, 6, 7 months post-election. So we see a lot of optimism. Market prices reflect that optimism. And now the question is, does this optimism turn into action? So as John was saying, if you look at the survey work relative to kind of where the data is coming in, the survey work is far more optimistic than the data we've seen. And so it really is now up to, do we get follow-through from managements and consumers to really drive markets and economies from here?
Does that make these markets vulnerable if we don't see a pickup in growth, if we don't see the healthcare overhaul happening?
I think no question. I think if you look at where the price action has come from, there's no doubt there's anticipation of better. So whether that's tax reform, whether that's corporate spending, all of those things are now built into market prices. And so you are probably at a point where any big policy fall down is going to be a disappointment for markets.
What assets are not fully valued, if not overvalued at this point? Asset classes, sectors. Tell me one thing that looks reasonable here.
Well, quite honestly, where we're looking for value is outside the U.S. So parts of peripheral Europe, obviously given the political situation going on in France, there's been disruption or still hesitation in parts of Europe. And then another place that we still see value is emerging markets. That's a place where, again, there's still lots of consternation. We don't know what policy is going to look like there. So they are cheap relative to other places in the world in developed markets. So that's a place where if you're looking for value, you're probably better off looking there relative to some of the developed markets.
So how does the international story apply to the firm in general, Enrico? I mean, as CEO of Chiron, what do you need to do to expand in terms of getting the international markets exposure?
Yeah, so that's a great question. So one of the things we focused on is launching a UCITS product, so focusing on international investors, and that product's coming to market actually the end of this month. So we're thinking about it, the expansion of Chiron into the international markets, both attracting international investors, and that's part of our growth plan, quite frankly. And as we look at the opportunities abroad, as Ryan said, we think there's lots of interesting opportunities both investing abroad as well as gathering assets abroad.
So tell us about quantamental investing. How does that work, Ryan?
Well, so what we've done is we've taken big data quantitative techniques, and we also apply fundamental overlay on top of them. So really what we're trying to do with our quantitative big data work is replace sort of the grunt work that analysts around the world are doing at the security level. And again, we want to get the bias out of what's happening in our investment process, and big data and quantitative tools help you do that. However, what they don't do is solve for change. So they can't solve for changes that managements make. They can't solve for change in policy, either at the Fed, the ECB, the BOJ, or even regulatory policy. So those are things we can't quantify, and actually fundamentally we have to dig in and have an opinion about. But again, the quantitative work helps us have a very accurate starting point so that we know where we're starting from as opposed to guessing.
So can I ask, you just started this firm a year and a half ago. There's been a lot of talk about the regulatory hurdles to business and startups. What did you see? Did Dodd-Frank get in the way in getting this business going?
Yeah, I wouldn't say Dodd-Frank was something that got in the way. As you know, we started as a traditional investment management company, so we had to go through all the obvious regulatory hurdles and regulatory process of both launching the firm and launching the fund. There's clearly a lot of work that needs to get done to do that, but I wouldn't say it was specific around Dodd-Frank, but the regulatory hurdles were large, and there was a lot a lot of work that went into that.
Would it have been easier to set this up somewhere else, in London or in Hong Kong?
I don't know. To be honest, I can't give you a direct answer as to if it would have been in a different jurisdiction, if it would have been easier, but there was a lot of work that went into it for sure.
Well, and one of the things that I would add, though, that we did see when we launched was the DOL. And all the uncertainty that the Department of Labor regs were causing in advisor channels. And again, all this, how did they reorganize their business around concepts that were really vague and unfamiliar? So that is something that I would say we did run across with our advisor clients. It's just, how are they going to deal with this in implementing mutual funds going forward?
Really, really important point. Let me ask you before you go, how significant a sell-off would you expect if, in fact, we don't see tax reform by August?
Well, look, I think we've seen very little volatility post the elections. And so, yes, everybody's waiting. So, look, I think, markets are, look, the general economic data has gotten better, no question. It's been getting better for 8 months. So it's been getting better for a while. But I would say at this point, given the lack of volatility and given where prices are, any disappointment here is, is something you've got to be aware of. 5–10% drawdowns are generally pretty typical in markets and not abnormal. So I think something in that order would probably be on the radar again if there's some policy misses here.
Yeah, because we've talked about this in the past. We're going to get earnings growth in the double digits this year.
No question.
Regardless of policy coming out of Washington.
No question.
Gentlemen, we'll be watching your new firm. Congratulations.
Thank you.
Thanks very much. Enrico Gaglioti, Ryan Caldwell joining us there. Chiron.